All right. Good afternoon. Good afternoon to the fam. Peace, power, and profit. Happy Wednesday. Way back Wednesday. All right. Let me make sure I catch the YouTube here. So I'm gonna have that reverb right. What's going on, fam? I hope everybody's having a great afternoon. This is an impromptu scenario, but in any case, when I do these impromptu scenarios, I still want to be able to provide a little, uh, I guess, a little context to any conversation that we have, because again, we want to make sure people are aware of exactly what we're uh, analyzing, so to speak, or what we're going to cover. Be it ever so brief or whatever. Right? This is a brief scenario, of course, because I have actually more obligations to coming here around about the 5 o'clock hour. So I want to kind of come on and get to the point and get on off here, then go handle my business. Right? I have training sessions coming up this afternoon. So shout out to everybody again. Hope everybody's having a wonderful Wednesday. What's going on, Oba Zane in the building already in the house? Peace, power, and profit to you as well, Oba. Peace, power, profit to Oba Sunny as well. That's already in the bat chat and the YouTube side of things. Getting it in. Hope he's having a great day as well. Hope you guys are circling your wagons and looking at this market like, okay, what's going on here, right? And so as you see on my screen, just showing you just some of the many facets of things that are surrounding our marketplaces at this point, of course, when we're thinking about market pivoting and the issue with rate hikes and the issues with this, that, and the third. You say to yourself, well, okay, where are we going, right? We bounce from one level to the next, so to speak, right? And so when those things are in the works, quote unquote, how should you how should you plan going forward, as one would say? And we say, how do you pivot, right? How do you how you plan for the for all that of the risk and that of the reward potentially, right? And they got to say potentially, because we don't know what markets are going to do from one moment to the next. We can only plan based upon what we see far as the levels, right? We trade levels, right? We trade catalysts, we trade adherent risk, right? As one would say, risk on or risk off, right? And so within doing so, again, it'll be prudent to take the high road in most cases, right? Because discipline is what, as they say, preventive maintenance is worth more than a pound of flesh, right? You have to be preventive maintenance minded and not just throw everything at the kitchen sink and see what sticks, right? Because markets will definitely put you in a bad situation sometimes if you're kind of like overly leveraged in places where you probably shouldn't necessarily be, right? So a lot of things have gone on since last time we've been on live. I should say, well, just basically the weekend, but 3 days is a lot. 4 days is a lot in markets, right? In terms of all the different, moving parts that make up these markets, right? So when we speak about, what are the risks, right? What are we playing here, right? We just had a very important economic calendar date event today, and that being the Feds obviously came out today. Pretty sure you guys who were able to watch that or catch it, or at least saw the beige book, because they had to deliver their book today, right? So when the Feds delivered their book, the same way like we're running our own little investment portfolios, that would be the same as you running your book. They will have to turn over that data to the pretty much the American people, right, the public, and say, hey, this is what we're doing as far as our policy. This is what's going on as far as this, as far as that, yada this, yada that, right? With that also being said, of course, just understanding the nature of where we are as an economy as a whole, right? The economic situation surrounding our growth, our stagnation, or the value of our decline, so to speak, right? Some people say, we might be, on the fringes of a recession based upon these things, and inflation getting out of control. The Feds are behind the curve, not in front of the curve. Now we got a war with Russia that's going to exacerbate the commodity market even more, which is going to push the ideal of what CPI data points through the roof, or the PCE, right, or the PPI. One of those three readouts are very, very detrimental. Why? Because they're somewhat organic readouts, even though you would think that they do have the power to mess up those numbers a little bit here and there, but ultimately they are the more organic readouts. Beyond that, are looking at the bond markets, right? When you see bonds yields begin to rise, that means bonds are obviously at this point being sold off, and yada, that's kind of signaling that we're getting ready to go into some more of a rate hike environment. So a lot of moving parts again that has gone on since we last spoke. Why? Because again, turn of events happen all the time. Again, if you want to, you want to use the terminology saying, okay, well, what's the the latest sentiment surrounding the whole conflict in Russia and Ukraine, right? Where is that, or how's that faring far as markets, right? So markets just been trying to price in all this volatility with war. And that's weird when you say that. How can the markets price in a war? Well, give it to them, meaning Wall Street, leave it to Wall Street. They will figure out a way to, bake in the cost of what a war would look like. Now, here's the deal with any scenarios, right? Those costs are rolling costs. Like when we said rolling 12 months chart or rolling, data point or data plot or, whatever, that means it's ongoing, right? So, and that's to try to, put a summation of what it will look like, on a weekly perspective, on a monthly perspective, on a quarterly to a semi-annually to an annual perspective. Then therein lies where it becomes a little tricky. Why? Because you can't really assess a dollar value to what that will look like, depending on how certain economic markets will feel the brunt, right, of what war looks like for us, the economy, right, being less, having less imports coming in from a Pacific region that may be affecting them because they are bigger what consumer of those products. That's what war does, especially if it's a geographical location, an area that has a lot of input in terms of agriculture, be it commodity-based metals, et cetera, et cetera. Well, we do know without a shadow of a doubt, Russia and Ukraine are the second and the third largest wheat producers on the planet. They are the second and third largest wheat producers on the planet. There goes your pastas, your breads, there goes your wraps, there goes your wheatgrass, there goes your wheat diet, whatever that has to do with wheat. They are the second and the third largest wheat producer on the planet. Well, guess what? Right now, all that's being destabilized. Whatever they already had in the reserves that's already on ships and boats, and like at this point, that's it until they can figure out a way to fight a war and deliver goods at the same time. So that's going to be a major impact to a lot of nations. And we do know some of the more, the nations that are definitely below that of the equator, in Africa, India, Arabia, South America, and even some parts of Europe, definitely Europe, even though they're above it, they are big importers of wheat, right? Especially Egypt. I don't know if they eat a lot of wheat in Egypt, right? I don't know if y'all saw that or not, but I was looking at some data points. It's like they eat a ton of wheat in Egypt and the Arab nations as a whole, right? With the breads, whatever, right? Even in India. So again, those are the adverse effects. That's just talking about the wheat. Then there's palladium, right? They go into a lot of the microchips, right? Big producer of palladium in Russia, right? There's the natural gas and the oil scenario, right? Big energy producers. Of course, Russia kind of sits at the head of the OPEC. Putin is a very big instrumental figure when it comes to OPEC. Y'all see the connection there. Hence, that's why that's the last resort for its administration to sanction Russia is their energy, right? Their energy, platform, so to speak, if you want to use that perspective, right? What's going on, family? Be humble in the build. I see you in the house. Peace, power, and profit to you, over. So there's a lot of moving parts that goes along with this. So at some point, again, you have to be able to bake all those things into the market. So I just have a few that you see on the screen here. I got Russia, Ukraine, course, inflation, oil spazzing, which it is. We got oil over $100 a barrel, which, we kind of seen that coming at some point. We was already strategizing to the ideal of what it will look like in the event we get to $100 a barrel. We got the bond markets, all over the place. What are they signaling, right? We had the big crash recently because the Russian ruble crash, which obviously affects their bonds and affects the bond markets as a whole, right? All that debt that's tied to their currency. And this is how they're trying to stabilize their scenario with all these sanctions that's hitting them every day. That's also problematic in terms of being able to, backstop our debt. Why? Because a lot of, institutions in America, JP Morgan, Morgan Stanley, those types, they hold a lot of Russian debt. And they got a lot of business transactions with them. So it takes a lot for companies like that to offload a lot of that, what word can I use here? That risk, right? I was going to use the word cancel, but that's a bad terminology. But that's a lot of risk that's sitting on a lot of these investment houses' books, barring the fact that we're in a war. And if you hold anything that's of Russian asset value, you're going to be frowned upon, right? The great investment community going to look at you like you're a trader, right? This is the odd value of how markets work. Now, even though markets supposed to remain neutral and play the value of what? Of value, right? You're supposed to invest in value and value only. But we do know that America plays a very hypocrite hypocrite mindset when it comes to, how they feel like you should go about, obtaining wealth in your own regard. Right now, when they do a lot of their bad policies and again, a lot of the stuff that they do when it comes to war, this, that, and the third, you're supposed to just accept that, right? You're supposed to accept that when they're giving money to all these refugees and giving money to people who got other conflicts in their own homeland, and they're kind of being benign, neglect minded when it comes to you here in the country in the stateside. What does that tell you, right? And so they always try to play on your heartstrings in that regard, which obviously doesn't fare well with Wall Street. That's the point. Wall Street tries to play neutral in that, just plays, will feed us the money. Wherever the money's coming from, that's where we're going to invest. But nonetheless, again, these investment houses do harbor some of those assets that are in the Russian, sphere. So that in lies the problem in a lot of ways. Like, how do they offload that? What's, should people be too hasty to just jump out the window and just, diverge themselves from all their Russian assets, this, that, and the third? Again, it's to be, in my opinion, assessed by that individual, right? No one should try to guilt trip you into making decisions about what you see, or assess going on with the world, right? That's just how I look at things, Coach. Now, I would never let government, anything of that nature, persuade me to take a position on certain that I see, or I can make my own educated decision from based upon conflict, this, that, and the third. I don't look at these people as no more than what I see them, not what the government tells me, right? So again, that's the power of being in a position to have power, or the ability to make your own money, right? Because they can't shun you, they can't cancel you, they can't put you into a box and say, well, we're going to punish you because you don't take our approach, right? So again, the strength of an investor is just that you have that anonymity, right? It's like a comedian, right? Comedians are supposed to be off limits, right? They should be able to, crack jokes on everybody. Everybody can get it. And if you're sensitive in your feelings, then so be it. Deal with it, right? Again, you're not above reproach. You're not above, this earthly plane in the essence where you can't get it too. And so that should be the mindset you should go into any value of an investment, any value of entrepreneur endeavor, that regard that, again, the greater aspect of what you're doing, not necessarily is permanently putting anybody at adverse risk or harm. You should be able to operate as you should. Is that, that's the whole main point of this. And so bringing that back full circle to our conversation really quick here, just dealing with the idea of where the markets are, where we at, where are we in terms of the overall system? Because we're hearing a lot of different things coming from, again, Washington. We're hearing things coming from Wall Street. We're hearing things coming from the Main Street side of things. We're hearing things from the international community as a whole, and everybody's trying to make sense of all this, right? Well, I would say this, without without a shadow of a doubt, you're definitely somewhere in the substrata, right? As you see, I have on my screen here, is like we are all in this together, right? That's what they want you to accept, right? We're all in this together, but we know that's not necessarily the case, because again, the idea that you don't vote on whether you're going to approve Congress to take your tax dollars and give it to people, regardless of the situation. Again, repeat, regardless of the situation, you don't have that right to push back against that. Well, at least through some value of okay, we're going to do a referendum or vote from the American people. We're going to send this to Congress, right? Well, you don't have the time to do that by the time that they kind of did these emergency policies through Congress and sent that stuff down the range. Then it's already done. It's like, what do? Right? So again, we're all in this together, right? We've heard that saying a lot of times, right? We've again been privy to accepting the idea that they know what's best for us, which is weird because they take you from a layman's perspective, or they take you from a very indigent perspective, right? That you don't understand geopolitics, you don't understand economics, you don't understand what it takes to run a country, so to speak, right? You're just sheep, essentially, right? They know better than you. So that's the idea of how governments now become to themselves, right? A value of in some aspects, friends of oligarchs, right? They're more celebrity value than they are more civil service. That's just my opinion. Of course, that's just me speaking in that regard. It's my opinion. Now, with that also being said, of course, you also have to realize, again, for what it's worth, where do you fit in the grand scheme of things in terms of, how you're going to position yourself to succeed, deal with all the risks that are coming down the pipeline, be it, hey, this staycation of inflation, now that we know that war also exacerbates the idea of inflation, because these things run it. They run up even more because they become scarce. It disrupts the already value what the supply chain issue is dealing with right now. It gets destabilized even more. Why? Because boats and ships are not moving goods and services as they would necessarily or naturally, et cetera, et cetera, et cetera. Y'all get it, right? We're smart people over here. So yeah, there's a lot to contend with. There's a lot to contend with. There's a lot to contend with. And I say again, always be prudent and disciplined above all things. And learning how to assess risk, price, price in risk, that comes with the territory of being an investor. If you're a long-term growth orientated value or value whatever, then you just, you sit still. You understand that these are the volatile times of markets that, number one, you've already been planning and assessing at some point. But number two, that, you don't have to, ear hustle all the day-to-day, lunacy that goes on with, everybody trying to tell you what's right and what's wrong for the markets, especially when it comes to your positioning, right? You just have to understand what do you, for what it's worth, how do you, assess value in terms of what it means to you and your money, right? Because you're the investor. That company is the financial vehicle. Whether you feel like it's priced just right, overpriced, underpriced, that is going to be relevant to you and your money on a long-term rolling scale. And that's how this stuff works. So when you're seeing markets pulling back, or individual stocks pulling back 20, 30, 40%, 50, some even pull back 70, 80%. The first thing you say to yourself, man, that stock has gotten a whole lot cheaper, right? And then you still, go do all the necessary back tests to figure out exactly what that looks like, on a chart perspective, where it came from, right? Is there more in it that potentially can happen? Or if it's not, if it's the bottom or you perceive it to be the bottom, do you start adding dry powder or stop, money into that investment on a dollar cost average basis, and you be comfortable with the ideal of what that looks like, right? Again, given the daily up and down aspects of markets, it is all what they say in the eye of the beholder, right? So that's why we want to make sure everybody remains, solid and calm and realize that this is what markets do. They jump all over the place. So really quick, let's go over here real quick. We only got like about 8 minutes before the bell here rings here. Like I said, we're supposed to be kind of looking at this until the close. This is what the SP 500 looks like here going into the close today. We've had a staggering bounce today where literally we're coming off the 429 handle yesterday, which we closed at around 429. We instantly had a gap up. We'll say a run up after the after-hour session ahead of the State of the Union address, which we know that typically happens. Algos will try to front run any potentially good news that may come out of the State of the Union. Again, the president speaks. They're going to speak about a lot of different things that are dealing with policy, stimulus, or the lack thereof, inflation. I mean, whatever, right? Even though it's supposed to be about what's going on in your country, of course, they had to kind of, adjust to the idea of what's going on with over there in the Middle East or the east side of the river in terms of the Atlantic. So, of course, they had to, throw that in there or make the case why they're doing what what they're doing in terms of playing a role in trying to quell the squash the beef between Ukraine and Russia, which I know it to be for what it is. It's a civil conflict, and no one likes war, granted, but it's a civil conflict, and sometimes, granted, you got to stay out of other people's business. That's hard for people to accept in this world. Why? Because they've taken the approach that the world is just unicorns and peace and just, all the people can just do what they want to do. And how dare you disrupt my value for being what I want to be and being peaceful? That's not how the real world works. A lot of these things are old since you were born, since your parents were born. These are conflicts that's been going back for years and years. And for what it's worth, again, if it really doesn't disturb your, your situation, your backyard, maybe you should just mind your business. But that's hard for people to accept that. And I know people are going to blow back or push back. They're going to say this, but people people die all the time in and around America. What is done about it? Where's all the aid coming from overseas to help, all the, the issues we have here in America, the police, scenarios, the injustice system. And you see how that work? Again, so people are always going to try to guilt you into accepting their reality over others. So not going to make it political, but sometimes you have to air that out, because as investors, again, we do and we should always have anonymity. Why? Because we don't move, under all that, social consciousness, right? If you want to be a social consciousness investor, well, invest in stocks like ESG, right? But when it comes to what we do over here in the stock market, look, we're just trying to price in value. We're trying to grow our money based upon production, and also the value of, the level of service and innovation, things of that nature, right? To make our lives so supposedly easy. We're investing in the future, right? So with that being said, that's the background. So that's why you got a market that's looking like what it's looking like today, where again, it's trying to price in everything that we heard last night from the State of the Union. It's definitely pricing in the fact that we kind of got the idea that, you know, the future funds rate value of the market start pricing in a quarter, well, a half a basis point before Russia kicked off. And now it has backed off that over, 70, 80% that we would get a half a point, rate hike for as interest rates. And now that's been reduced to 25 basis points. Now, best case scenario would be, of course, if if they just delayed and said, we're not going to even do that. Wall Street would have loved that. Of course, they would have, but we know that would just really, infuriate, smart people who really understand what's going on even more. And an aspect to say that these people are really trying to crash the economy. Why? Because they refuse to cut back on all the stimulus liquidity injections that they're doing for printing American dollars, digital American dollars, that is, being the Federal Reserve, and giving all this money again to Wall Street because it's not going to Main Street. That is the problem, right? And Main Street is, bearing the brunt of this on their shoulders, right? In their wallets, in the refrigerator, and the gas tanks, in their, the bills, this, that, the third, with energy consumption costs. Inflation is kicking everybody in the teeth, right? Well, those who are definitely more on a paycheck to paycheck, or at least not even you're not paycheck to paycheck, but the fact that your quality of life is going down substantially because of inflation, that's problematic, right? And so we want to speak about those things in a more, organic fashion and not try to gloss over them. But that's the job of Washington. That's the job of the Federal Reserve. They like to gloss over the data and say, well, everybody should be in a position to weather their own storm. But we do know that that's that's just more of a the cop out, so to speak, right? That's them playing both sides of the of the spectrum, right? They're trying to tell you that, you gotta bear your cross and roll with us on this one because we're doing this for the greater good of XYZ, right? But we know that's a whole lot of malarkey, right? That's a lot of baloney. It's phony baloney, right? Because they've been riding that truck for going over almost a year and a half. And again, it has only exacerbated our issue when it comes to the ideal of inflation, and our cost of living that has not really been it hasn't been appeased naturally when it comes to what they call these wage increases, right? They said, well, you just got a raise, you got a 2% rate or a pay raise, or 3% or 5%. But guess what? Inflation is still sitting at what? 7%. So again, make that make sense. And it's still going up. Again, make this make sense, right? You got a 3% raise, but 7% inflation, it's still going up. They just ate away your little raise just like that. So good luck. You still under, right? You still under. This is the game that they're playing, right? This is the game that they're going to always continue to play. If they can kick the can longer down the road, then so be it. That's what you have to deal with. So when you hear Joe Biden, if you listen to the State of the Union last night, you heard him going in about, we're going to do this and we're going to do that. But ultimately, he really didn't have a whole lot to stand on. I'm just being very neutral in that regard, because a State of the Union is supposed to be almost like an earnings report. What have you done for us? Your first full year in office, give us an assessment of what your report card. Again, I throw that question to you all. What has the administration done substantially that you can say, okay, this is good, whatever, right? Again, as I said, beauty is in the eye of the beholder. Well, you guys are the beholder here. What do you behold as far as his administration, right? As far as the progress he's made or have not. That's how you assess things, right? And we, assess things a little bit more under more scrutiny, because as investors, you have to look at your economy, which is supposedly supposed to be tied to your Main Street production value. But although we know of late, that's the lie, because they've been assessing it towards the ideal of what it looks like for the stock market. Trump made it very apparent. Biden is trying to downplay it because he want to make it like that's not his thing. But trust me, they watch this stuff all the time. Why? Because they know bonds are tied to it. They know that people's pensions are tied to it. People's again 401ks, their Roth, their TSPs, right? Drip funds, the whole nine, right? It's tied to the value of how well the market is or is not doing, right? In terms of your money working for you behind the scenes, even when it's being diluted, even though it's being diluted by the Federal Reserve just constantly printing money. And now, as we know it, quantitative easing is supposed to come to an end come what? Around March 15th, right? March 16th, March 15th. That's when the last quantitative easing bond purchase is supposed to cease to exist. Now, weirdly, so that's listed a day or two before they actually start to do the lift off as far as rate hikes, right? So I think it's like about 6 billion less left that they have to run off in terms of quantitative easing. That's not the balance sheet. That's just the quantitative easing. That 120 billion that they was doing ever since literally September of 2019. They were printing, or they was doing the reverse repo operation values. They still got that going. That's on the balance sheet. But on the quantitative easing side, which it got ramped up because of COVID even more, it got up as high as 120 billion, right? 80 billion was going towards treasury notes, T-bills, whatever, and the other 40 billion was going towards mortgage-backed lending loans to backstop people mortgages, right? Again, all that stuff was going into the markets. I repeat, the markets, right? And so there lies again what we're talking about here. So here we go. It is now 4 o'clock. The bell has rung. We're a minute kind of after the fact, but the bell is over, right? We got the market that has pulled back off that illustrious high that we got out of today's price action, just kind of looking at the market as a whole. When we assess the idea of what it looks like when we're pinging between different pivot points or target prices or whatever, all the market did was came at the bottom of the channel, right? This 10-point channel, right? It's bigger, it's a 20-point channel to be exact, right? Since coming off the 420 pivot in itself, but we play the markets in 10-point channels. That's basically what we do. That's just what I do, but we speak about it a lot as a whole, right? As a group theory, right? So that's your 10-point channel. I mean, you see yesterday we got around like 428. We got there as low as 427, but we end up closing up around 429, right? And basically 430. I couldn't make this up. Well, what do we do today? We got all the way close to 440, right? We got up as high as like 439, 50 something. So literally that's a whole 10-point move, 100-point move in the SPX as a whole in one day. Now, if you look at this on a one-day perspective of movement, you went from, basically pulling back to the bottom of the channel, the pivot, which we already had assessed. We've been talking about this stuff religiously, how to play the pivots, and you ran all the way to the top of the channel and, bailed out those guys that were sitting up there in those call positions, either early in the week or from last week, who rolled their positions into this week. And materially, you ask yourself, what has changed, on a the geopolitical side of things? What has changed for inflation? What has changed for GDP, CPI, PPI, PCE? What has changed for mortgage rates and values in that regard, for the housing lane? What has changed since, for the job market, whether, has gone up, gone down, stayed the same? What has changed for all the, the already in play Cold War that we're having with China that seems to be glossed over at this point? The only thing that really has changed is what? COVID, right? Did not talk about it as much. Ain't that something, right? All of a sudden, COVID just kind of went away a little bit, right? Ain't nobody pushing vaccine mandates. Matter of fact, the CDC came out and removed the mask mandate. Go figure, right? Everything that if you looked at the State of the Union last night in Washington, right here in my backyard, what did you see? You saw the entire chamber with everybody with no mask on, maybe with the extension of maybe 1 or 2 people, like elderly people. They still just couldn't risk it. Everybody else had their mask off. Go figure. But those were the people that was browbeating you about wear your mask, get the jab, wear your mask, get the jab. You're selfish. You just don't want to do this. And now all of a sudden we know that the jab is just no more than a therapeutic. That's just basically what it is, because it really does define the value of what a jab really is in terms of what it's supposed to do. It's just more of a therapeutic, right? Slows the rate of the ideal of fatality. No more, no less. So again, it's here to stay. It's endemic. We get it. But beyond that, you don't hear the media browbeating you on that any longer, is my point. So going forward, you say to yourself, okay, is the market pricing in a whole new value of risk that we don't know? Or, what's going on here? Well, I say, again, just based upon what we've already been able to assess and what we already know, this is just, again, markets trying to convince, Wall Street that it's still it's still good for you to bet on America, regardless of war, regardless of, tensions that may, cause our markets to be unstable for whatever odd reasons. I mean, it's an endless, array of these things that could potentially exacerbate the ideal of what we're already dealing with, right? Make it worse, essentially, right? It's going to make it worse, right? So, again, we want to make sure that we're on top of these things. We're going to speak about them in a way that's honest and that's forthright, based upon what the data is showing us. based upon, all the things that are surrounding, you know, what, may or may not happen far as, the ideal of with the Russia-Ukraine situation, basically, the adverse effect that with markets. We're going to speak about it all, essentially what I'm saying, I guess. Right. So just, caveat real quick. We do got some earnings coming out real quick. And I just went over to my charts real quick. I don't want to, miss that too. We can talk about a lot of different things at once, right? We can multitask very well. But as of now, we do have markets moving a little bit here. We got, some massive stocks dealing with, AI. We got some cybersecurity plays. We got, what else we got? We got a few retail still out there. They got earnings going on. We had a crazy earnings report this morning with some of the stocks. And as of now, the main one that everybody was waiting for tonight was Snow, right? Snow is one of those companies that's just very, very, very liquid. It's very, very overpriced. In my opinion, of course, the PE sits at well over 500 something on the PE, price to earning ratio. It's rated at a very expensive valuation. And so it had a small run up into its earning report, about 20 points off this low pivot. And as you see here, the stock is just getting pummeled right now. You're talking down here near 40, 50 points here. Close to it. Seems like close to 50 points staying there. And I mean, this is a massive dump where a lot of people are sitting in this stock. And they were thinking that it could obviously run higher, essentially, right? I mean, there's no end to the to the ideal of what this looks like, on a bigger picture perspective in terms of markets are still frothy in some areas, right? The market is still frothy in some areas. That's, again, we don't write the rules on this, we just abide by it. But again, where Wall Street would have you to believe that everything is okay, you have these darling stocks. I'm calling them darling stocks because a lot of people that's in Snow, to be exact, I think Warren Buffett is invested in the Snow, right? You got some big names that invested in Snow. And yeah, this is what your Snow looks like right now. It's down literally about 60 points on its earnings release tonight. Okta is another one. Okta actually deals with cybersecurity. They had a negative print, right? They got a valuation that's well into the mid billions, right? The tens of billions in terms of evaluation, but yet they still pushing out negative EPS, right? They got negative EPS readouts here, as you can see down here, right? And it's crazy, right? So they barely beat on their revenue as a season. Q1 earnings they beat barely on the revenue round about roughly about maybe 10 to 12, $1 million here. Of course, you still talking about $388 million revenue value, but you got a a valuation well into the tens of billions. And you still pumping out a negative EPS. Again, look at Snow, guys, just giving up the ghost, guys. Look at the guys who would have bought puts. If you bought puts on Snow right now, you're literally getting the same benefit that we saw when Facebook crashed, right? When Netflix crashed, right? Some of the stocks we were in, right? We made a killing. I mean, this thing's just giving up the ghost. Now we're talking about down to 70 plus points. There goes Okta finally now, because why? Okta somewhat follows the same space, right? They follow the Snow, they follow the Cooper, right? They follow the Splunk, right? Splunk, matter of fact, Splunk had earnings, right? Cooper, as you see, I have Cooper up here on the screen. Rivian got thrashed today. Of course, we know the whole issue with Rivian. Rivian's kind of falls in that same boat with Lucid, right? These companies got these high valuation, but they still have no production. They're playing off the back of basically Tesla, but they ain't really doing what Tesla could do. Tesla went through its heartaches and hard times. It can hold its own weight, even being overvalued. These companies cannot. They just got richly priced. Wall Street ran them up, and now they're falling back to earth. That's how life works in markets. You have to realize that just because Wall Street is bragging about a certain stock and telling you that, oh, this is a fair price, the markets are seen to be priced just right. You have to be your own analyst. You have to be your own, fund manager, your assessor of risk and value. And that's what we look to do over here on this channel. We give you the skinny as it is. We don't fluff information. We don't pump stocks. We don't, get people all riled about certain things just because they have an affection to it, because we don't own over here. We rent, we lease. We don't get emotionally involved in no company. Why? Because to me, every company that's publicly traded is a pump and dump to me. And with that approach, that keeps me disciplined, and it keeps me It keeps me focusing on, all the things that matter the most, especially when it comes to my money. Right. So again, Snow is just getting pummeled here. Again, we're talking down 70 points. 70 plus points. Actually, it was more than 80 because we got up as high like 270 here, right? Now we're down to like 190. I mean, let that marinate for a moment. Again, Octa's still sitting there, like, okay, well, yeah, we're not as bad as possibly, as Snow. I'm curious. I'm pretty sure Splunk probably looks the same. I can almost imagine, right? Because they kind of fall in that same space, Splunk, Cooper, or some of those like that. But again, this is the market, right? This is the market that we sit here and look at, and we tell ourselves or try to convince ourselves that no, everything is gravy now. It's gravy, baby, right? As they say in the South, right? Gravy, baby. Yeah, okay, about that gravy. Yeah, reality is something different sometimes. Given you know, exactly how markets will and will not perform, but nonetheless, again, somebody's going to wake up to a massive bag tomorrow in Snow, a massive bag, right? Bag holders and also people who just got a bag tonight. Again, 70 plus points. I mean, if you bought anywhere near 240s, the 240 strike put, the 260 to 250s, uh, again, you're talking massive gains there, just in general there. You're already up, well over, $6,000 on the contract, well over $6,000 per contract already. Right? They say already, right? As they say in Texas, right? So, you might have paid, $500 for that contract. Well, it's gonna be worth about $7,000 tomorrow. Let that marinate, right? That's what we do, right? We assess risk, we get excited, right? And we trade, again, and or look into the ideal of, finding opportunity in most, some of these weird places that most people, don't necessarily, assessing, that's not their thesis per se. Who knows? But we look at those things as opportunity, right? Oh, let me get my screen back up here. Sorry. All right. So again, that's just the nature of market. So where they will have you thinking that it's all clear, right? Even though again, the market, you had a massive run up today. Again, you had massive double, triple, quadruple tops up around that 439 and change. Again, a little bit over the 200-day moving average, right? And that's all it was. It's just, it was just testing to try to break out. We know the bigger, uh, in my opinion, the bigger level to have assessed was the 440, right? Because 438 was just the pinging point of where markets fell from that certain, uh, cliff at some point, and we had that test of 428. We pivoted there, coming off the 420 lows. That's all it was. These were just pivot points, right? So the test for Wall Street today was definitely if you can close above, 438, right? Or at least even better, if you close above 440, you really got the attention of the bulls, right? The bulls are back in town. If not, again, all you did was just ran back to the top of the channel. Again, let's go back here. See what I'm saying? Right? You're right back up near that channel around what 438, right? As you see, we pinged it, before back on the 28th of February, right? Before the market's over, the month of March was, February was over. And again, going back a little further, right? Let's go back a little further here, right? You'll see exactly where we're hitting that resist, where we hit that resistance. See right there? It's right there. All we did was came back to a place where a lot of chatter is at over here, right? Going back on the 11th of February, again, at that pivot point right here, back on the 17th, again, on the what, the 28th, or somewhere around the 27th, 28th of February. And again, we ran up to that same point again today, coming from what? 410. So the market isn't somewhat of it's an ugly U-shaped reversal, if you want to call it that. But how Wall Street looks at things, they're just trying to say, is it risk on, enough to at least try to what? Get the markets off the proverbial low, and we priced in the ideal of maybe trying to we could see if we can attract some people to buy this market here. Then we'll just kick the can down the road, right? We know that if we can price in, war, we can price in the Fed, whatever that's about, right? How can you price in war, right? They pricing in people's death. They're saying this is a moment to just buy a lot of stocks, regardless of the fact that it on the adverse effect, oil is shooting through the roof, wheat prices through the roof, aluminum prices through the roof, metals as a whole through the roof, corn is through the roof, soy through the roof, lean hogs, right? Lean hogs. Hogs has been traded at high rates and on the commodities market, futures market. All the commodity prices are going through the roof, but yet, okay, y'all get it. So yeah, you have to be, again, aware of these things and just know exactly the extent of what markets are signaling when they're trying to, signal something. What are they really saying? Well, some people say, man, what are you really saying? What are you really saying? Well, it ain't hard to figure out basically what they're really saying, right? It's just whether or not a person accepts, for what it is at that point, right? So yeah, so you ran up near the top, you got rejected several times, even though it seemed like it was going to blow off top when it got above 439. That's basically what it was a blow off top, right? Traditional. Look at all this sell volume that came in the back in the day. See right here on the SB right here, you see my little mouse pointer right here. Look at all that sell volume on the back in the day. If these people are very confident in this market that, the rate hikes and this, that, and the third, yeah, granted, yeah, you had a 10-point move. Yeah, take profit. Yeah, definitely secure that bag. But I can assure you here, that's 4 million plus shares that got dumped at the bell. 4.7 million shares got dumped at the bell. Are you trying to tell me that's all retail traders taking profits? Retail traders ain't that sophisticated. And today was a what? An expiration on the what? SP 500. So puts and calls that were bought early in the week, Monday, Tuesday, last week, they expired today. If you weren't going to roll that position over, then guess what? You had to accept, selling it today, going into the close, right? Well, that actually just ended, especially when the SPY about a minute ago, right? Because the futures allows you to sell contracts up to 415, right? If you have the SPY, so to speak, right? So yeah, again, this is the extent of how these markets are just, they're all over the place. It's hard to read it. And so most people can accept the value when you're pricing in volatility. These are the things that you should look at. These are the things that you should look for and not get caught in your feelings, right? And I say that because a lot of people, you'll hear a lot of different values and viewpoints from everybody. Of course, get all that you can, but make decisions based upon what you're able to assess far as natural risk, right? Not all this, oh man, it's going to do this because it's this, that, and the third, right? You have to accept, you have to put everything on the table is my point. And then you make that assessment, right? Then you make that assessment. All right. So there you go. So again, that's just kind of giving you a little backdrop a little bit. Again, far as the whole issue, far as I guess if you want to talk about, the State of the Union a little bit. Again, a lot of that was just window dressing. A lot of it was just what we know it to be. What's going on, everybody? So you got family coming in the building already. All right, got the brother Snotball in the house, sister Angie in the building, Ilba Angie in the house. Shout out to you, Ilba. Peace, power, and profit to you. We got Hypnosis Doberfine in the building. Peace, power, and profit to you, family. The brother Snotball, over Snotball in the house. Again, brother, everything in the house. Sister Tamika's in the house today. What's going on, Ilba? Shout out to you as well. Hope you guys have a phenomenal day, right? Again, a lot of things have going on over the week, right? Since we last been on. I keep saying that, but it's just the weekend we were on. But this is what, again, what we've been planning for. I always say that when we come on, right? We was already planning for this. We was already saving that bacon where we were. And we constantly talk about these things, as much as possible to make people realize that, hey, this is what it takes to game plan. Just like a person that, that participates in sports or whatever kind of competition, you have practice, right? That's the whole importance of us having training sessions. That's the importance of us doing, midweek, live events where we coming on assessing the risk of markets and just putting notes out there through the value of what message boards and back chats and Discord rooms. It's all about game planning. So when markets do pivot, should you, right? Or should you not? That is determined by how much you're assessing and valuing risk, right? We know all the different variables and moving pieces of the chessboard, the pieces that are out there. We know what they are, right? We know what they are, right? So when those things happen, guess what? We make the proper moves to make sure we protect ourselves. So again, we are all in this together. Are we? That's the question I ask you guys before I get ready to get off here, right? I got about another 15 minutes before I can, have to get off here. But are we all in this together? Are you in unison 100% with what they're telling you for us, what you might have heard in the State of the Union last night, what you're already assessing for us, what you're having to pay at the gas pumps and at the grocery stores? Are we all in this together? Right? Are you willing to bear, your piece of wood across your back, right? I use that terminology, right? And deal with all this stuff and then still try to supplement the world, right? Always trying to play the role of, let me, save everybody but except the people who pay into the system. Essentially, that's what's happening. So again, that's why we took the approach that we're going to play ball as we should have from the very beginning, and realize that, guess what? No, you're in this by yourself, because when you really need or in need, who comes to your rescue? Let that marinate, right? I've yet to see them show up to your house with a check. I've yet them to see them show up to your house with all this aid like they give to everybody that tries to come into this country either illegally, or when you got civil conflicts and disputes happening in other nations across the waters. We want to send all your tax dollars to those scenarios. Let that marinate, guys. They want to try to browbeat you into saying that, no, you're supposed to accept that as a part of being in this country, which is foolishness, right? That's just my opinion. Let me stand on my own square when I say that. So again, hierarchy will have you believe we're all in this together, but there is a hierarchy. You're way down here on the bottom. You're at the bottom down here, right? You're at the bottom, right? Or somewhere in that, those two years right there, right? Right. And everything at the top telling you it's okay while they make money off of war, famine, bullets, bandages, suffering, peace. They're eating from both sides. They're burning the candle on both sides. And again, you're in the middle of that candle, waiting to be what? Liquidated. If you again sit down and lay down and don't do nothing. So that's why we advocate becoming, your own personal economist, your own personal investor, learning how, to maneuver in marketplaces, learn how to, run your own book, essentially, right? As an investor, right? How to grow your own money, how to work your own money, as opposed to you working hard for it. That's the reality of what we stand by every day. And we're just trying to help people see that. So again, nothing that we wasn't planning for. We've already assessed, again, the ebb and flows of what this market looks like when it's bouncing, pivoting, acting at food, dumping, not dumping. Again, it snows down like $1 gazillion right now after hour. Like, again, somebody gonna wake up tomorrow, $7,000, $8,000, $10,000, $20,000 richer. I'm not making those numbers up, too. Well over those numbers, right? For some people, right? Depends on the amount of contract, and that's just what they call single contracts. Single contracts, again, just from 270 down to basically 187, basically close to 180. That's already in itself. If you just do a 100% delta value in that, that's already going to be what? Let that marinate. That's going to be close to about 10 grand in itself. I mean, if you bought in the money, you're already going to be up well over, near 10 grand on that position alone. And that's if you just bought one. Now imagine you bought 2 or 3 contracts, right? Y'all get the picture. That's why I love what I do too. That's why I love option trading as well. All right. But again, markets are great through any aspect of its pivots, right? Through any aspect of its, weirdness, right? Markets are weird as you can think, right? As one would think. But the more you become convicted and precise in learning how to read the numbers, as one would say, right? Follow the numbers, follow the money, then all these weird days don't really bother you. They really don't distinguish your skill set from one day to the next. Why? Because it's just day-to-day market, volatility, right? Even when it's acting weird and, market's acting goofy, whatever, you realize what's happening there, and then you make the proper adjustments that's necessary. So like we said, we were already thinking like what the market was going to look like, actually ahead of all these particular moments. We've already priced in this, the commodities that we're going to rip. We've been right thus far. Of course, wheat, palladium, silver, gold, definitely alumina, right? We've been beating the drum on alumina going on 5, 6, 7 months, somewhere around there. Like, get ready, right? And so whatever, aluminum is just constantly ripping, right? Aluminum is constantly ripping, right? Ripping to the upside, that is. And there's no end in sight. Why? Because now what aluminum, does do in terms of pricing in the idea of what now war looks like for us, the use case of it, it only gets even more scarce. Why? Because now people need every aspect of aluminum that they can get their hand on, iron ore, bauxite, all those minerals to manufacture things, right? To deal with quote unquote war, to deal with you know, again, I'm not gonna go deep, but y'all get it, right? I'll keep it, shallow as possible. I'll let you do the back end of that, but y'all get it because we already talked about it before, so it's not like a secret. But really quick, let's look at our favorite chart. Oh, good old Alcoa. Our good old buddy Alcoa, right? Of course, like I say, going way back when it was breaking out, again around the mid, summer of last year. Like I said, we were watching that core at around the chop zone here between $30-$40, a share. Of course, I played a lot of the earnings off and on. And then after that, in came the breakout. So you literally bounce from $30-$40 a share, especially 20 moving average here to bounce here around 35, $36 here. Now you're sitting up here at 82. Now, keep in mind, aluminum was breaking out before Russia. Aluminums were breaking out before Russia. Russia only made it worse. Why? Because now that's a whole nother scarcity value in terms of what that does in conflict of war and items being moved, whether it be through airspace, be it through boat, because of disruption value of war. People focusing on that as opposed to just scarcity, what causes stocks to run up. I repeat, scarcity is what causes stocks to run up, or the perceived value of that value of scarcity, or the perceived value of their innovation, or the perceived value of their use case. That's what causes stocks to go up. And when that use case or that scarcity or that value is not necessarily present, what do stocks do? They fall back, they become neutral, or they pull back and go lower, underperform until they become what? Interesting again. That's the ebb and flow of markets. That is the ebb and flow of markets. It's a cycle that's endless. The markets are nothing but one big pattern, one big trend. If you think anything less than that, you're looking at it all wrong. One big market, one big trend. One big pattern, one big trend. So again, this is what you're dealing with here. Look at the bend on that curve there, coming off the COVID lows when Alcoa was sitting at $5 a share. Forget Ford. Ford basically went from $4 to 20 something, right? 22, 24, $24. Alcoa went from 5, now it's sitting at 80. We were talking about buying leaps in Alcoa when it was around about 40 some odd dollars a share, 30 some odd dollars a share. Buy your leap, buy your year contract out. They were dirt cheap. Now you're sitting up here at 80 some odd dollars. And guess what? Most people say, well, man, that's crazy. Well, guess what? Like any good chartist or a technical person, you say, okay, now it's at the top of the integration band. It's probably sitting there. They ain't overbought. Well, guess what the RSI? Look at here on the daily here. Look at this on the daily. Overbought. Way up here, riding that for the longest. Over here, same thing, riding it for the longest. Riding it for the longest up here in this incline. Any pullback that you get at this point is going to be probably another buying opportunity. Being that we are at the top of the band. We literally are at the top of the band, granted, right? Any pullback you get here, especially if you get lucky to get it back down to 73, get luck. But these pullbacks going to be very shallow. Why? Because Wall Street is greedy and they're trying to run the value. They're trying to run the stocks that are giving them at least the semblance of defensive value in dealing with inflation. This only, again, gives the green light for aluminum even more now because you got a conflict in Russia. And it doesn't seem to be ending no time soon as of today. I got to say that as of today. So, yeah, we were ready for this. We were saving that bacon. Here we are. Oil stocks. We were talking about oil stocks bouncing and pivoting at some point, even when it was sitting at around 80, 70, and then 90, back and forth around that pivot. And then all of a sudden, here comes the scenario. We breaking out. Right? We breaking out now. It's endless, right? So, yeah, we're ready. That's the best way I can put it. Oh, hold up. I had my thing up there. My bad, guys. I always do that. Y'all got to forgive me with that. I get busy. A lot going on. Right? I've been training all morning. I had training sessions, stuff to do, whatever. So here you are. Here's your perspective here. This is why, again, we just stay patient. We stay paused and we just reap the benefits. Why? Because when you understand, again, the moving parts, you know how to invest better. You know how to think like that of the average, chess player would think in terms of how markets will respond through different, talking points, through different variables that come into play here. You know exactly how to position yourself. So again, from 30 plus all the way up to 80 plus, look, smiling. That's all I'm saying, smiling, right? Smiling. And we were already saving that bacon. We were saving that bacon. What's going on, Oba Chris in the building? Oba Chris Woods in the house. Peace, power, profit to you, Oba. Go subscribe to that brother YouTube channel. You see his name down there. Click on it. Click on his name. Right click. Put it in the search bar. Go to his channel. Subscribe to his channel. Right. What's going on? Oba Mathis in the building. Brother Mathis in the house. Oba Sims in the building. Brother Al in the house. Shout out to you as well on this Wednesday. Right. On the hump day. Right. So again, we were ready for this, guys. We were ready for this. We were saving that bacon. We were saving that bacon. Copper running right now. Silver running right now. Palladium, rhodium, all this stuff, right? Running, right? Metals, precious metals as a whole. We was talking about the flight to safety coming off the back end of Q2 of last year. We're going into Q3, started playing for what? Playing for those cyclical trades. We're getting ready. We've been talking about cyclicality going on now, about what? At least on a constant basis, at least 7-8 months, if not longer. If I'm lying or flying, go look at our videos. We've been talking about the cyclical nature of markets. Get ready for the cycle change. Get ready for, a move from high value, overvalued tech growth stock and start looking for some of those more centric value plays. We've been talking about the consumer staples, the ideal of some of the energy plays that may stand out above others, right? The ideal of some of the commodities that are going to be very useful going forward in a high inflation rate environment, especially if stagflation ever entered the conversation. No harm, no foul. We were already saving that bacon. We were saving that bacon, and now it's here, right? Again, whatever, right? Most of us like this right here. Most of us doing I call it the Ukraine and Russia shuffle, right? Some people say, well, that's weird to say that. No, it's not, because at some point when all this conflict is over, those are the same people. They just having a civil war. When it's all said and done, they're going to be like most of y'all when y'all have a spute or a spat with your family member and you patch things up, they're going to be dancing together just like that right there. They're gonna be doing that arm hunt right there. Like, I'm with you, bro. Right. So again, it's unfortunate because again, there's lost life. There's a lot of things going on with that. But then again, dealing with how we understand the world, is set up at this point. What's really going on, guys. Y'all know exactly what's going on right now. Let's keep it 100. Right. Y'all know exactly what's going on right now. Keep it 100. And that's why I say we're not going to be moved emotionally one way or the other. We're going to stand our ground. If you feel a certain way, that's fine individually, but that's your perspective, not everybody else's. So again, everything that you heard last night during the State of the Union was more so a lot of window dressing. Again, I asked a very simple question. Right. I actually posed it on Stock Twits. I think I asked a very simple question. I said, can you name me two things that, going into the State of the Union, this 1 year, assessment of, the administration, right? I'm just going to say the administration as a whole. That means everything that's inside that, leverage aspect of the administration, meaning all those who are on the House, Senate, and as the presidency as a whole. Could you name two things positive that they can brag on going into that State of the Union review? Two things, only two. And you make your assessment from there. You make your assessment from there because, again, the market is telling you one thing, too. It's telling you something else. And Main Street is definitely telling you another thing. Main Street is definitely signaling a different thing. Data points sometimes are skewed and they tell you one thing, but Main Street is telling you something totally different than that of even what Wall Street. Because Wall Street, again, is going to play ball one way or the other. These people are invested long term. They're going to play pivots and they're going to play, the dozen. They're going to talk a good game. They're going to speak a good book. But we know that they're just whatever, chasing dollars. Too many dollars chasing too few of what really notable organic assets. Too many dollars chasing too few values of notable assets, so to speak. And that's why they got to constantly be risk on, even when it seems like it's doomsday. Clock has been ticked up a few places. And believe me, before we even get into that conversation, we'll have to come back on and do a live on that one. But yeah, okay. Russia ain't, it's whether you hate, love, indifferent to this whole issue with that. These people got nuclear bombs. I'm just saying, don't let these people tell you that it ain't, it can't get real in the field. How many people tell y'all that this thing wasn't even going to happen? A lot of people all over Twitter, Facebook, Instagram, Discord, Stock Twitch, Telegram. Man, they ain't gonna, man, Putin ain't about a lot. They ain't gonna be no war. Ain't gonna be no war. How many of your posts y'all saw people saying that? Don't believe the hype. Don't believe, this and that. Don't buy into that, bro. It ain't gonna happen. We were like, oh, okay. You might want to reassess that scenario. Why? Because if you understand historical context and how conflicts have worked and have been, assessed over the, time immemorial, these are old beefs. These ain't nothing that came out of nowhere. When people, that's another conversation another day. We have to come back and do another live on that. I don't have time to go into that. I'll leave that alone, right? But I'm just saying, there was a lot of people that was telling y'all that this, that, and the third. All right, whatever. All right, so what's going on, Ober Rich B in the building? Peace, power, profit to you, Ober. Shout out to Ober Rich B in the building, right? Happy to have you in the house as well, right? And everybody that may be listening that can't necessarily speak or type, right, or whatever, I appreciate you, and we appreciate your view, and we appreciate your support to this channel, to our assessments, our constant, value of trying to bring truth to power when it comes to looking at the investment world from a different angle, a different lens. We have a different analogous approach, than most people, but it's still synonymous to what markets are what rated to receive in terms of being able to assess risk. And so that's what makes the market fun in that perspective, right? It shouldn't have to be you having to feel like, that, oh, this is just, oh man, this is just too hard and too tough. It's not. You can have fun and make money, right? That's a saying that we coined a long time ago. Have fun, make money. We stand by that. Why? Because it shouldn't be hard for you to enjoy life, make good assessments on the entrepreneur endeavor, value, being able to assess risk as a investor, and enjoy the spoils thereof. You shouldn't have to feel guilty about working smart, not hard. You should not feel guilty about working smarter and not harder. That's what this is all about. And that's what we're trying to convey here when we crank this channel up and we go live, when we talk about these things. We're trying to get people to see that for every $2 that you have put away, for every dollar that you have put away, for every 5, 10, 50, 100,000 that you put away, that money is dead until you actually put it to work. It is dead until you put it to work. And that's what we're trying to convey here, that these people have found a way to become mega rich, mega wealthy, mega stable, because they realized a long time ago that when you put time over money and you put it in fertile soil in the right proper perspectives or right environments, it will grow. It will grow even during ultra sunny days when it might scorch the earth, even when it's ultra cold, and sometimes that may stagnate the value of the growth. Nonetheless, variables of life happens all the time, but the overall longevity of things puts us at a point of on an even kill of evolution. Hate, like, love, and indifferent to it when it comes to money. People are going to constantly be innovating products. People are going to be figuring out ways to better equip you with more turnkey services that you can utilize for life. That's just how this stuff is set up, right? And so we just want to piggyback on some of that evolution as well as investors. Again, emotionless in that perspective, in terms of realizing that, hey, you're making financial decisions based upon the rules of engagement. If you want to invest in personal values and passions, they got a laundry list of things you can invest in that are more centric towards your passions and whatever this, that, and the third. The market is vast. It is super vast, right? So again, when markets pivot, should you? That's the question you should ask yourself every day. Don't chase. Don't get FOMO. Don't phone, right? Fear of losing money. Don't get FOMO. Fear of missing out. Trade what your book can handle. Trade what your thesis can handle. Trade what your money can handle. Stay patient, stay poised, stay disciplined, and realize that, again, it's a marathon, not a sprint. If you ain't built for the day-to-day action, don't be trying to do that. Equip yourself with the proper knowledge so you can do so, and then engage that, right? Above all things, this is a long-term perspective. That's what we need to focus on, right? And no matter what, we know the feds are going to say what they can, say whatever they can to continue to stay relevant, because they know that they're relevant because they hold all the keys in their hand. The feds literally got more power than the president right now. They're dictating monetary policy, literally. couldn't make this stuff up. So again, realize that right now it's a dumpster fire. Why? Because now this whole issue with Russia, it just gave them a what? A scapegoat to bad economic policy. The administration and the Federal Reserve. Yes, it did. Ain't nothing changed because Russia what? Kicked off a conflict with what? Ukraine. It actually made it worse. It actually made it worse. So show me where there's fireworks in the stock market now where everything is just so peachy and clean and rosy all of a sudden now. I'll wait. It's a dumpster fire. I'll leave y'all with that, right? I'll leave y'all with that. But y'all already know my feelings. So, no need for me to act like I don't, like y'all already don't understand, right? We get it. It's a dumpster fire. So that being said, guys, I'm gonna get out of here again. I've training obligations here coming up here at 5 o'clock. I'm gonna get off here. Go back and rewind this if you missed it, if you're able to. We appreciate everybody that stopped in the building here today. All the family. We appreciate you guys 1,000,000%. Everybody that patronizes the channel, everybody who comes through and show a view, a like, or share, or subscribe, who just watches us on Facebook, Twitter, any of the other ancillary social media sites. We appreciate you guys, and realize that this is it is a village, right? It's a communiversity, as one would say, right? It's a communiversity of think tankers, right? Of people trying to come together and figure out how to grow their money. Simple as that. No more, no less. No more, no less. Right? And we'll leave it at that. So we appreciate you guys. Thank y'all for tuning in. And we'll see you guys on the next one, guys. Again, it's still earnings season. That's all I can say. It is still earnings season. As y'all saw tonight with what? Snow. So on the way out the door, let's pull up that chart one more time for good old snow and see what snow is doing here. Somebody gonna wake up to a very big bag tomorrow in snow. Again, I'm talking well over $7,000, $8,000, $9,000 on one contract, right? That's what we talking about. That's what we talking about. This right here. Look at that money right there. Somebody gonna wake up tomorrow with buying them puts. Get excited. It's earnings season. Let's go.
Calm down before you stress up the groove. The energy a little different when the blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you because I stand tall like I'm on my tiptoes, baby. You think a little too small. I got big goals, baby. Hey, where the money at? Look, I just need the info. Pronto, I go and get it and split it with my kinfolk daily, and I'm the type of I might change my number on you. Yeah, that's how you react when people took a slumber on you. Pretty brown skin, baby, I can see the summer on you. You see all the bread, and I know it make you wonder, don't you? I ain't surprised at all. Seen them rise and fall. Went up the mountain, it wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the mood. Yeah, I worked too hard for it. No, I need it, beat it, before you mess up the mood. Yeah, I worked too hard for it, and I need it, so please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. Yeah, I worked too hard for it. Yeah, don't mess up the mood. Oh, it's so crucial, I gotta keep it. It's in the ass everywhere. No, it's not a secret, and I bet they didn't think that I'd ever get it. Everything you've done, I get it. The life you're dreaming, I live it, and I'm coming in high. You better get out the kitchen. Yeah, I could make a hit on whatever you pitching. Baby, let me fill up whatever you missing. Or you like it up at the top, it's a better view, isn't it? I'm not surprised at all, no it. Hey, what you need? Come on, just pay the fee, I supply it all. Went up the mountain and it wasn't hard to climb at all. At the top I found some relief, you see, so please don't mess up the mood. Yeah, I worked too hard for it. No, I need it, beat it, before you mess up the mood. Alright, I worked too hard for it. So please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. Yeah. Oh, come on. I worked too hard for it. Yeah. Don't mess up the mood.
Simple as that. Don't mess up the mood, guys. Stay patient. Right? There goes your market. Get excited. See you guys on the next one, guys. Peace, everybody. Peace.